Yes, thank you so much. Look, that was quite some presentation, and I have looked at some of the results you guys are posting. 95 grams per ton, and all those are shallow grades, shallow depths as well, right? Typically, high grade for, do I say, very shallow depths, it's about what, 1 grams per ton?
Yeah, so typically, from a mining perspective,
Mm.
the shallow open pit material, again, you can mine it depending whether it's oxide or sulfides. I mean, you could mine it anywhere down to, 0.2 grams per ton, but you'd want to have an average grade of, kind of 0.5 or higher typically. But again, if you look at oxide projects in other parts of the world, I mean, their average grade is getting down to 0.3 grams per ton. So a lot of it will really depend on, whether it's open pit as well as what the strip ratio is to drive the economics of the project. That's one of the real advantages we've got at our Enchi project is our strip ratio is only 2.1 to 1. So we can obviously have a low grade with a lower grade within the open pit oxide material. But as you get deeper and start to start to look at underground mining, obviously there's additional costs associated with underground mining. So as a result, you need higher grades to offset those additional costs of underground mining. And back to this Chirano slide here, if you look at Chirano, they've been mining for over 10 years now. If you look really closely, they're actually at Paboesi now mining underground at 800-900 meters. At Aquaba, they're down to 500-600 meters. They've now drilled down to 1.1 to 1.2 kilometers below surface. So they're obviously very deep. And the other thing is they're now mining between 1.5 to 2 gram material. But obviously, given all of the capital has already been spent at Chirano, they can obviously mine much lower grades from an underground perspective.
Okay, very nice. In terms of, you have 90 kilometers to drill, and I think after the last time I checked, you had only done 20 kilometers.
Yeah, so in terms of our resource update that we put out at the beginning of June, so within this 1.4 million ounces, we've got a total of 76,000 meters. And within that 76,000 meters, we were able to include 20,000 meters of our current 90,000 meter drill program. Okay. So we've got an additional 70,000 meters that that is not included in our current 1.4 million ounces. Of that 70,000 meters, we've released about 48,000 meters. Okay. So to date, we've released 68,000 of our total 98,000 meter program. So that leaves us with an additional 22,000 meters of drilling, which we will release over the next number of months as we get our drill program completed. So from that perspective, we will have lots of news flow to come over the next number of months.
Yeah, and from what I gather as well, I know there are issues with receiving assay results from the labs here in the in North America, but I hear you don't have that sort of problem in Ghana at all.
Yeah, again, we're very fortunate from that perspective, and again, I think the fact that Ghana is Africa's largest gold producer, sixth largest gold producer globally. There's a very well-established industry within Ghana. Ghana also acts as a regional hub for a lot of West Africa, given the political security and the safety that there is in Ghana. So from that perspective, there's a lot of mining services companies operating in Ghana. Our assay lab sits just outside of Tarkwa, so it's about a 4-hour drive from our project. And we haven't had the issues that you're seeing globally. We're getting our assays turned around typically in about 4 weeks. Whereas, as you highlight, in North America, you can be waiting, 12 to 14 weeks for your assay results. So we're very fortunate from that perspective.
Okay. In terms of your board, I noticed that almost everyone had some sort of relation with Newmarket Gold.
Yep.
Are we replicating Newmarket for this project?
That's ultimately our goal, is to replicate Newmarket or any one of these very successful companies here. I guess for your listeners, those who are not familiar with Newmarket Gold, that started off as about a $10 million company. There was a transaction that was completed on an asset in Australia called the Fosterville asset. The team, Doug Forrester, who is our chairman, and Blaine Johnson, who's a lead director, they were co-founders of Newmarket. They started an aggressive drill program at the Fosterville asset, and 18 months later ended up selling that company for about $1.4 billion to Kirkland Lake Gold, and it's still one of the tier 1 assets within Kirkland Lake Gold. So that's a good example of the shareholder value that's been created with a number of the companies that we've previously been involved with.
I think also in Ghana you have quite a few takeovers going on as well.
Yeah, so Ghana, if we look at it in 2021, obviously I kind of highlighted that obviously we've got a number of major companies operating, 4 of the top 10 largest gold producers on the planet. And if we look at 2021, it was also very busy from a merger and acquisition perspective. You had Shandong and Nord Gold, who were competing to buy Cardinal Resources, which sits up in the northern part of Ghana, and Shandong ended up winning out in that bid. We've had Asante Gold buy Resolute's Bibiani asset, and if you follow the news flow on Bibiani, which sits about 75 kilometers to the north of us, you'll see that they're looking to fast track that back into production. You've also got Chifeng, who recently announced in Q4 of 2021 that they are acquiring Golden Star, which has been operating in Ghana for a number of years, as well as I mentioned, we've also seen meaningful investment in country. We've got Newmont, who's investing another $800 million in their Ahafo asset. So I think, again, it speaks to what a tier 1 jurisdiction it is, the fact that you've got all of that M&A, merger and acquisitions happening, as well as very meaningful capital investment happening in country.
So are you looking at just exploring for more resources, or potentially going in the direction of building a mine yourself?
At the moment, we think where we'll create the most value for shareholders is through exploration. I mean, we've still just scratched the surface from a exploration perspective. I mean, 90,000 meters is the largest ever drill program, but I mean, you could drill over 1 million meters on this project and still have room to go. So what we will do is we'll continue to aggressively explore, but as we, as we hit meaningful meters drilled, we will look to continue to update the resource, as well as look to put out updated economic studies on the project that fundamentally underpin the value of what we've got at our Enchi project. So for now, exploration remains the focus for the company.
Okay. In terms of your listing on the Toronto Stock Exchange and the OTC markets, I noticed that your volume is quite low. What are you guys doing to address that?
From a trading volume perspective?
Yes, please. Yeah.
Yeah. So, I mean, one of the things is obviously we've got 40% institutional ownership. These are deep-pocketed, long-term focused investors who are not out trading on a daily basis, as well as obviously management and insiders own about 27% of the business. So a lot of the company is owned by really long-term focused investors. That being said, we are very conscious of volume and that investors need liquidity to be able to get in and out of stock. So we're very active from a marketing perspective. As I mentioned, social media is one of the things that we use, as well as we typically attend a lot of different conferences that have both retail or institutional investors with the goal of increasing that liquidity. I mean, we trade about 150,000 shares a day. Which for a company like ours isn't terrible liquidity, but it is something that we obviously always look to try to improve on.
And let's look at this scenario. Let's say it's because I haven't been in this situation before, but during takeovers, for instance, what in the scenario whereby you have low volume, what happens to your shareholders' stocks? Because if the price, let's say, rises based on valuation, how can they take advantage of it if the volume is so low?
Well, typically what will happen on any takeout is the company, will get a bid for the company, and that'll be at some sort of a premium to what the current market cap is or what the current price of the company is. So let's just use the example that the company's trading at $1 a share, and the acquiring company comes in and offers $1.40 a share. So with that announcement, what will typically happen is the stock will trade up from $1 a share up to somewhere around $1.40 a share. Let's say $1.35 a share. And at that point, obviously, shareholders can sell the stock in the market at $1.35 a share, or they can wait until the deal closes. Let's say it's an all cash transaction at $1.40 a share. What will typically happen is the stock will trade up from $1.35 to $1.40 as you get to the closing of that transaction. Once certain regulatory approvals are completed and other kind of approvals happen that de-risk the actual takeout of that company, then it'll trade from $1.35 up to and including $1.40. If you were to wait for the closing of the transaction, then you would get $1.40 for every share that you own sent to your brokerage account. Does that kind of explain the process, Abbas?
It does. I was only concerned about, well, if there is in volume, so it's not like you are trapped. Either way, you still make money.
Yeah, either way, you'll get the $1.40. It's just whether you decide you want to wait for the last 5 cents, in my example, between $1.35 and $1.40, or whether you want to just sell it in the market and not wait for, let's say, 3-month closing period. That, Abbas, is in a all cash transaction. If it is a stock transaction where let's say the acquiring company is paying for the target company using stock, so using their stock, then it will end up being a portion or percentage of their company, which then will be tied to the acquiring company's share price. So then it will move up and down depending on what the acquiring company's share price is doing. So, you know, the $1.40 on the day of announcement, if the acquiring company trades lower, then that $1.40 will typically go down in relation to where the acquiring company is trading.
Okay. You had mentioned earlier that there are no warrants at all with the company. Could you briefly explain to our listeners what advantage having no warrants gives to shareholders?
Yeah, so what will happen is a number of companies will need to issue warrants when they do a financing to further attract investors to buy that you know, buy that financing or participate in that financing. So what will, you know, let's say a company is raising $10 million. They will, you know, offer maybe a half warrant, a full warrant as part of that $10 million raise. And what that warrant does is it will allow the person who owns that warrant to purchase additional stock at a premium to where the financing is done. So let's say the financing is done at $1 a share. They might issue a half warrant at $1.25 a share, and that warrant will be exercisable over a 2-year period. So within that 2 years, if the stock rises to $1.50 or $2, well, you've then got, you know, a number of warrants out there that people can exercise at $1.25. And what often happens is, as the stock price is rising towards where that warrant is exercisable, people will be selling their stock and just holding on to the warrant and the value that's attached to that warrant. So it can sometimes create what's referred to as an overhang or selling pressure on the stock, because people are just wanting to hold on to the warrant and are selling the stock as a result of that. So by not having warrants outstanding, it eliminates the potential for overhang or potential selling pressure on the stock.
Okay, great. So how does yourself and management acquire stocks?
So we've participated alongside investors over a number of years on financing. So the bulk of the ownership that we've got will have been based on financings, but then we will periodically also buy stock in the market the way any other investor would purchase stock.
So pretty much getting it on the open markets. Wow.
Correct. So a combination of that, or if you look, you know, I've participated in all of the financings that we've done since I joined as CEO.
Okay, great. In your opinion, in terms of value of the company, do you think it's a fair reflection what the market is giving it?
I mean, I don't think it's a fair reflection where we're sitting today. I mean, I think it's rare that you find a company like ours with a true district scale exploration project sitting in a tier 1 jurisdiction along trend from a number of 5 million ounce plus you know, deposits and endowments. So from that perspective, you know, I don't think it's a fair reflection where we're trading today, but that's one of our jobs, is to get out there and really highlight to the market, you know, the fact that our view is Newcore is undervalued in relation to the project that we've currently got.
Okay. One last question I have here, which is, what I know you are traded on these two markets I had mentioned earlier, but what about people say in Ghana also who have deep pockets or not too deep pockets but are interested in trading, but don't have access to these markets, what restricts you from listing on the Ghana Stock Exchange?
We've looked at potentially listing on the Ghana exchange in the past, and it's something that, you know, we constantly evaluate in terms of, okay, you know, does it make sense, and when does it make sense to potentially list on different exchanges? I mean, people have also suggested listing on the London exchange. So there's nothing that precludes us from listing on the Ghanaian Stock Exchange or London Stock Exchange. It's just something we haven't done. I mean, in 2021, we got ourselves listed on the OTCQX. So that was, you know, that was another market that obviously allows, you know, US retail investors to more easily buy the stock. I mean, that's the largest pool of capital in the world. But it's something we always continue to evaluate is whether it makes sense to list on additional exchanges. And there is a cost obviously associated with being listed on different exchanges. So we obviously, you know, always look at what the cost benefit is of different listings.
Okay. No. Thank you so much. Look, that's about all the questions I have for you. You've been very generous with your time, and I really appreciate you making the time to join us today.
Yeah, you're welcome, Abbas, and great chatting with you. You had a lot of very good questions, and if there's any kind of follow-up questions, obviously feel free to reach out. We're happy to answer those.
Definitely. Thank you so much, Luke.